we were at a conference last week, and I was able to spend some time with John and Michael. And one of the things that we talked about was kicking off with something that might actually be more in the mainstream press, rather than diving into the minutia right away of some of the key issues and challenges that we've got within the auto finance world. Some of the things that you're reading about in just mainstream press. So John, I'm going to start with you. One of the things we hear a lot about is the world of EVs. It's been growing in the Canadian marketplace. We know there's lots of influence. We know that there's a lot of technology and change coming out of Chinese manufacturers. And we chatted a bit about this last week, and I'd be curious on your thoughts around that, because it's one of the things that everyone in the ecosystem has to think about, deal in differently. How do you see things happening given the turmoil that's happening around EVs today?
Sure, thanks for that, Darcy. We've got a number of EV partners that we do business with, and I can tell you the space has evolved quite a bit, still rapidly evolving. I would say the government has relaxed some of their EV mandates. For some of you who might not know, the government has a mandate that by 2035, 100% of the vehicles sold will be zero emissions. There was a 20% mandate for 26. They've relaxed that. And as some of the government incentives have gone away, we've seen, let's call it a softening of the appetite for EVs. Now that said, there's recent reports, and I don't have any inside information, but there is some recent reports that the government could be looking at lifting the EVs, the 100% tariffs on Chinese EVs. And I can tell you, I've had the opportunity to see some of the EVs built out of China. I was able to go abroad and drive some of them. And I think there was a notion initially that if the Chinese came in, everyone is going to be driving $10,000 EVs, and they're going to be, they're going to destroy the market. I don't think that's the case. That wasn't my experience with what we saw. What we saw were real premium vehicles. Sure, there was value there. I drove a vehicle that would have, at least in markets that it was selling for about 250,000 Canadian. It was a very high-end EV. It actually, that thing had the ability to float. Funny enough, that I didn't test it, but they told me if you drove it into a river, it could float for 20 minutes.
I don't think either of you would lend me enough money to buy that.
Yeah, we might be careful on what we finance with that. And so do I think they're going to come in? Certainly, if we relax the EV tariff, they'll be in. They'll be a real contender. I think it will help the space move forward. But I also think the government's going to probably relax some of those mandates. I think 2035 is aggressive. Do you want to take that one?
It's an update on the tariffs.
Yeah, it's an update.
Mr. Carney's calling Michael and going, hey, I just heard John say we were lifting the tariffs. That's excellent. Listen, I think it's a fascinating part of our industry is the whole idea of what manufacturers are thinking about, how technology is changing, and then how you guys are going to be able to lend against it. So Mike, we'll go to you further down. So we talked a little bit about manufacturers. The fascinating thing for me, there's some parallels to other industries, but when you think about what you guys have to deal with in the dealer community, so the acquisition of a car is just a completely different process than most other assets that we acquire in our lives. And we have these dealer networks, we have captives, we have the OEMs making decisions, and as a lender in that space, it creates a lot of complexity. And I know you spend a lot of time, on the road working with and engaging with dealers. How do you see this evolving over time? I know there's been, similar to the death of the branch one day, and yet the branch persists because customers need it. There's been a lot of talk about the dealers and how that's going to shift over time. You've seen this for a while, and it's been stable. I'm curious as to whether what your thoughts are going to be in the next little while around that dealer network.
It's a great question, because I think probably for the last decade anyways, a lot of folks in this room and Fintech trying to figure out how to disrupt the entire model. And in large part, making it very easy for consumers to start the process online, get financing, but yet it still takes 8 hours in the dealership to deliver your car.
Is that personal experience?
No, I found workarounds from that, but I'm amazed at people that are in the business kind of subject themselves to that process, and who has 6-8 hours to take delivery of anything. So I think that that's going to continue to evolve. The dealers are the dealer groups are getting bigger, so you see an increased challenge and tension between the OEM and the brand of the dealer group. That presents some interesting dynamics too in the market, and how you deliver services to them and how you support them as a lender. And then talk about EVs and the direct-to-consumer model that comes along with many of those brands. I think it's going to be an interesting time. So as lenders, we have to kind of adapt to figure out who our end customer is. Is it the OEM? Is it the individual dealer? And then remembering at the back end that there is a consumer behind it as well.
Yeah, that's great. It's one of those things that always looks like disruption is available, and yet, the steady state has continued to persist. So it'll be interesting to see if some of the new entrants actually not just change the technology of the end product itself, but how it's being acquired. Okay, Andy, we're going to move further down the process. So we've talked about the manufacturers, we've talked about the dealer network. Now we want to lend some Canadians some money to actually go ahead and acquire one of these. You're the objective, neutral party on this, and didn't want to put John and Michael on the hook to go, what are your lending practices? How do you go about it? What's the decision making look like? And the secret sauce of what makes their two banks so competitive in this space. How do you see things evolving in terms of just the lending model and the process of determining risk and understanding where and when the pillars of the industry should be lending money to Canadians?
Yeah, it's a great question. When we kind of look at what's happening in the lending space, it really comes down to data. So I'm going to speak a little bit of AI actually here, just a little bit.
We can't avoid it. It's got to be somewhere.
That's right.
Buried in.
But with outdated lending models and lenders increasingly looking to AI to augment these lending models, data becomes more and more important. As we all know, anyone who's used ChatGPT, the results of the AI are only as good as the data that's kind of put into it. So lenders are kind of recognizing this, and it's not just an underwriting data play now. So what we're having conversations with are about the entire kind of lending or auto life cycle, if you will, right? So what happened to the customer before they even showed up and applied for that loan? What happened to the customer after the loan was funded? What happened to the vehicle after the loan was funded? These are the conversations that are happening in the industry right now. They're happening, I would say, maybe behind the scenes, but these data discussions are paramount, I think, to what's going to be happening in this industry in terms of lending moving forward. And it's really important for lenders too, because we've seen elevated delinquencies, and so how can kind of sort of third-party, kind of neutral organizations like ourselves, like others in the industry, kind of help lenders kind of solve for these issues.
Does that resonate for the two of you in terms of the thinking and approach that you guys are taking, without giving away too much?
Well, I think I agree with you, data. I think the biggest challenge now is when we do get the data. It'd be nice to have data before we make the loan in many cases. And I think that's one part of the adjudication process that obviously is key to us. But more and more, what we're seeing, we'll talk about this a little bit more, but just the occurrences of fraud in the industry and how you combat that with data at the front end versus after you've been defrauded, right? If this was a bunch of dealers here, I'd be telling you that my emphasis is to take friction out of the process, but I'll tell you my emphasis here is to put some back into it. And I think we desperately need to do that as an industry.
Yeah, but the right friction for the right customers. That's the
Correct.
key thing with these tools that are kind of being implemented right now. Is it's a bit of a sledgehammer approach. Everyone's going through the same process. You need to make sure that you're identifying risk early on and putting good customers through a streamlined process and putting the bad customers through the friction process.
Absolutely. And it would be great if they would just come in with a little tag that says good customer, bad customer.
Well, that's where data comes in, right?
Yeah, fraudster or not. So at DealerTrack, obviously, this has been a primary focus for us in the last couple of years. Certainly, in my 6 weeks, it's been that. But working around fraud, so we'll go out of order. We'll come back this way again. So, Michael, we'll just keep the flow around fraud digging in. When you do talk a little bit about some of the stickiness in the process and the things that we need to be thinking about and where we need to go, it's definitely an industry ecosystem thing. And we're thinking a lot about, as a portal, what can we do? I know other partners in the ecosystem are really focused in on how we identify those people early on, how we help lenders identify at different stages throughout. But where do you see the fraud work going? I know this has got to be one of the top things within your agenda, and I'm curious your thoughts just overall on the fraud question and the type of fraud that we're seeing even.
To me?
Yep.
Well, I think your statement about it's an industry issue is correct. I think that's something that collectively we have to solve for. Because if I detect it and stop it, it's just going to go to John and vice versa. So we have to figure out how we're going to do that. As a first step, in the immediate future, TD is taking the step to mandate the use of IDV to a select group of dealers across the country effective November 1st. That's a big piece of what we are seeing first and third-party fraud. So being able to identify it at the beginning. But we do need, that flag to be picked up, if you will, as through the portals and passed on to other lenders if we are detecting it. So, again, this is something that we have to solve for. The consequences for fraudsters in this country are virtually nil, and it's that's what my number one problem right now is fraud. And it has impact to the good customers if we're not able to stop it.
I'm going to let you jump in on this one too, because that's obviously near the top of your agenda.
Yeah, no, absolutely. And I think Michael's right on this one. It's got to be an industry-wide initiative because the fraudsters are smart and they will move. They will figure out. So if we're IDVing one set of dealers, they'll just go to the other set of dealers. And if fraudsters caught at one manufacturer, one brand, they'll pivot to another brand. And so it really does have to be industry-wide or we'll get caught. We're not a captive for just one brand that we need to worry about. We service 4,000 dealers across the country and a number of manufacturers. And so it's difficult to isolate it out without going broad. So we're certainly willing to work with our partners and peers, but we need to get the fraud out of the system. It's a significant issue for our business.
That's great. You mentioned IDV, and maybe Andy, I'll let you jump in and go a little deeper on this. I know this is a topic. It's huge for us. EDV is one of the things that we're doing with the dealer partners. A lot of focus on the dealer partners to understand what that means. And as fraud has existed, as we've seen it grow, change, and shift, obviously regulators start to put an eye on what it is that we have to do. And so we think about, and I came from the mortgage industry and dealing with Fintech and all the elements of where we were headed on combating this. I'm seeing a lot of parallels in the auto industry, maybe a little bit further behind. And we know Fintech is imposing more specific rules directly on dealers who, while the large banks have been worrying about this, thinking about this for decades and working on this, for dealer, the idea of IDV and sanction screening and what a CAMLO is, this is all foreign. So as you think about that in our industry, I'd love to hear your perspective on the deep dive around IDV and other tools.
Yeah, it's a good call out. My background's mortgage as well, and I was just at the Mortgage Professionals Conference in Ottawa. I just flew in for this today. They went through this last year around this time. So we're here almost exactly about a year behind of where they are, and they've sort of successfully navigated through that, where their versions of DealerTrack are allowing mortgage brokers to meet FinTrack requirements. I want to kind of preface, like, they're meeting FinTrack requirements. It doesn't necessarily mean that those are the right solutions that are in market. And it's not like this isn't a competitive thing. This isn't a specific product thing. This is the existing tools we have in place are just keeping us like above water. We're kind of treading water versus the criminal organizations that are finding their ways through that. Like, every solution you can kind of throw out there, there's a way around it. Criminals have found a way around it. And so the IDV thing, I think, is we have to get through this process of rolling it out across the industry, and there has to be constant evolution in this process. And I would encourage lenders in this community here to start thinking about IDV less as a sole like fraud solution and more as a credit risk delinquency solution, because this fraud, especially synthetic fraud, is showing up in delinquency. And ultimately that's where you're going to get your cost benefit. If you try and kind of do a business case to reduce fraud, you'll never get it approved. Look to your delinquency, scan your portfolios, try and see if you can kind of find some areas where fraud is present, where you can kind of save some money, you can get some funding to kind of implement these more robust tools that are coming to market.
Great. I think we may come back to this a little bit. I think this is the area of where we need to have a lot more innovation. We will talk more about the ecosystem in a minute. I'd like to move like something a little happier. We're actually thinking about buying that car. John, I'm going to turn this one to you. We're talking about the mortgage industry, and as soon as somebody you would meet at a dinner party or anywhere else, it's like, is this the time to get in the market? Is this the time? Is it fixed or variable? And it's the same 2 or 3 questions. And I'm sure being in the auto industry, that's a similar thing. What are the same basic questions? So I will ask you at this dinner party, is this the time? I mean, we've got affordability issues, you've got rate uncertainty, you've got tariffs, and there's just that, I've never seen the word uncertainty written down so many times as it has been in the last year or so. Leasing, buying, what's the consumer sentiment, and what's your answer to that question when people are coming up and asking? And actually, I'll ask both of you. But
Sure. So maybe I'll start. It's an interesting time, undoubtedly, and I'll say what we saw when the tariffs were first announced was a big rush to purchase vehicles. I think everyone thought there was going to be a big increase in vehicle prices, so they better get out and buy vehicles, and we saw that spike in the early spring. But if you look at what happened globally is Trump put tariffs on everybody. And so if you're a foreign manufacturer and you're manufacturing your vehicles in Asia or Europe, and you're looking at your distribution network and allocation to the United States, what we actually saw with a lot of our partners is they shifted allocation to Canada. And so they looked at Canada as a little easier to do business with, maybe more profitable for them. They could avoid U.S. tariffs. And so we actually saw more allocation come in, and with that allocation comes additional incentives to move the product. As soon as they start allocating more product to your market, now they've got to create some demand. And so if you look at payments, we haven't seen an increase in payments. Actually, even for vehicles manufactured in North America, we haven't seen a material increase in selling price, and in fact, they've been heavily incentivized as well. And so the market has been strong. People, in my experience, when they need a vehicle, they'll buy a vehicle, but now is certainly not a bad time to buy. I would suggest it's actually a fairly good time to buy, depending on what you're looking for, but particularly if you're looking at a manufacturer who's manufacturing abroad, maybe got some extra allocation, and they're putting good incentives to move the product. Now, if you're buying an EV, we're seeing heavy lease penetration on EVs. People are generally opting to lease instead of purchase. And I think that just comes around the technology risk, the battery life uncertainty, and things like that. But good time, go out and buy a vehicle.
And we know who you want them to borrow from to finance that. Michael, with that conversation in the dealer community, when you're out talking to them and they're managing through those things in the allocation, managing inventory on their side, thinking about how they're going to play these things out, and then how they work in partnership with lenders to either create those incentives or find the right partner to be able to help move that and shift the consumer's mindset from I'm thinking about it to actually buying. What sorts of things are they telling you about how they're dealing with all of this?
Well, I think that what John said too. We are seeing more incentives in market. Interest rates are falling, so there is that natural push for consumers to go to the market. Dealers, in my experience, have been incredibly unaffected in large by the allocation shifts. They're finding replacement models inside their OEM that they can bring in that aren't subject to tariffs, so they are good at doing what they do, selling people the car that they didn't come in to buy. So, but meeting your needs through the process. But the supply issue certainly has abated from post-COVID, so people are able to go in and find a car if they want a car. The cost is lower. I'm surprised with all the noise in the marketplace, quite frankly, the volumes that we're seeing here, because I think everybody expected, a March pull forward of volumes, and that just hasn't happened.
Yeah, it's definitely one of those. You felt like a hype machine for a while. Now you probably see as much or more cross data. Is what you're seeing resonating, and is this a point in time, do you think, or is this something that you think is going to potentially shift? I mean, it's, again, tough to predict, but this feels pretty stable.
Yeah, I mean, our analysis says that, like loan balances are fairly stable. Credit score distribution is relatively stable, maybe leaning a little bit more towards the prime side, like a little. So if you look at kind of your percentage of prime versus your percentage of subprime, it's a little bit more prime. Maybe that's a shifting demographic who's buying. Maybe it's a little bit of, my colleagues here just tightening things up a little bit. Well, I don't know if they'll share that or not, but it could be one or the other. But yeah, we're not seeing anything like drastic that's kind of swinging things either way. So.
Okay, great. I want to get back to the ecosystem concept. So coming into the industry, this is probably the thing I was the most naive to, was just the complexity of what we've talked about: dealers, portals, other partners, the lenders themselves. And we've mentioned around fraud the idea that this is an industry problem and things that we can do collectively. I'm curious, for other people that may not know as much about that level of complexity that you all have to deal with, what are some of the challenges and or opportunities, and you guys can all jump in on this, in operating in this kind of environment, and for maybe more of the traditional lending community, what some of the differences are and what makes it unique? Because we've talked about life inside the bank when you're leading something as relatively unique as auto finance, that you spend a lot of time educating as much internally as you do everywhere else about what it is that we face, what some of the challenges are, where the different pools of profitability exist. I'd love for you guys to share one or two things that you find unique relative to the broader lending world.
Maybe I'll start. I think one of the differentiators about our business with relations to other areas of the bank is that it's not just a consumer walking into a branch and getting a loan, where they're, you've almost got this kind of broad consumer base coming in. We've got a dealer who decides which loan they're going to send us at which time, and maybe they'll send one customer to us and one to Michael, or maybe they'll send it to Michael first, and if he doesn't like it, then they'll send it to us. So the dealer, as the intermediary, adds a lot of complexity to our business. And so for us, it's one thing, we try and score the customer, but then we also have this, this dealer in between who plays a big role in not just deciding what we're seeing, but also in terms of the performance of what we see. It really makes a big difference in terms of how we originate the loan, who sent it to us, and how that portfolio performs. So there's this dealer element that certainly plays a big role in the business.
Well, I just add on to that too, because the dealer, there's a constant struggle for who actually owns the customer, and you know, the bank, if we're making a loan, we'd like to think that we own the customer and then can, you know, fully franchise that individual to other products. The dealer, in many cases, doesn't want us to talk to their customer, and if they do allow them, the OEM wants to lock them down. So there's that struggle in the environment for, you know, how the consumer is actually serviced, and I'd say in many cases it's to the consumer's detriment because they don't even in many cases know who their lender is.
Yeah, I'll jump on those two. This ecosystem is very similar to the mortgage ecosystem, right? You have this concept of, you have this origination source, right? The dealership group. You've got your technology platforms in between, and then you've got kind of the lenders at sort of that end of the process. Not really end of the process, but that's kind of how the journey kind of operates. And I'd say historically, each of those had their own kind of specific, you know, KPIs or objectives. Some similarities, but kind of, you know, they have their own kind of purpose and reason for being. I think fraud is that one thing now that everyone needs to work together. That's to be the biggest change here, and that's, like I said, I'm relaying it back to the broker industry, which is about a year ahead of us. That's really how it kind of started coming together, is the industry together said, look, we need to find a way to tackle this. We can't rely on the dealership. We can't necessarily rely just on the technology providers, and by the time it gets to the lender, it's too late. So something has to happen, you know, throughout that whole process.
Excellent. So we're just in the process of coming to wrap up. So in a lot of these things, people will take one or two key nuggets away, and I hope one of the things that you'll recognize is both the complexity, growth, change that's happening inside of auto finance. I think this is going to evolve. I think it's, even when we come back, and if we were to do this again next year, you know, the topics will have shifted. I still think we'll be very much talking about what's probably the biggest risk, which is the fraud element of what we're dealing with. So with just a couple minutes left, I'll let each of you go the other way, so we land on something a little happier, a little positive, not tariffs, not fraud, maybe AI. I don't know if that's going to be your answer, but one of the opportunities, one of the things you're most looking forward to, if we were to think about, we got together again, did this next year, and said, over the course of the year between, what's the one big fun thing, interesting, that you're either excited about in the industry, that you think you might see happen, and we'll work our way from the long end. So Eddie, you can go first.
Well, I'll just build on what I said earlier. So I think it's the collaboration. I think tackling these issues is going to have a positive impact on this industry. And so as we're collaborating to solve some of the challenges, we're going to find opportunities to grow together and create some certain efficiencies, hopefully with the end goal of improving the customer experience, which we kind of started off talking about.
I'd let's focus on competing on the things that make the experience better for the consumer, and let's work together to make it very difficult for those that want to make it bad for lenders.
And I'll maybe circle back to what I mentioned earlier. In terms of excitement, and what might be interesting is if we do see the Canadian government lift the 100% tariffs, we will see new entrances into the market, which is always exciting for us. It's an opportunity for new partnerships. But they've got some real interesting technology that they're building overseas, and they build differently. They feel different to drive. That would be exciting and fun for us as well.
Awesome. And I'm looking forward to that amphibious EV. You'll see me out on Lake Ontario. Thanks to this amazing panel. I was going to end with who you thought was going to win Game 7 tonight, but I'm assuming that's going to be unanimous. So we'll enjoy the game, enjoy tonight, and thanks everyone for your attention. Appreciate it.
Thank you.